The healthcare sector could be headed for a turnaround. The ETF that tracks the S&P 500 healthcare sector today touching an intraday record. That's its first since February. I guess the turnaround's already in place. After several consecutive quarters of earnings declines, our next guest expects a return to growth this quarter. We're looking at how to navigate the big picture with the Yahoo Finance playbook. And joining us now is Dan I, Fort Pitt Capital Group Chief Investment Officer. Indeed, it looks like these stocks are anticipating some return to growth here, Dan. So what's driving that?
Yeah, well, I think we are really at an inflection point. You know, it hasn't just been a few quarters. We've had actually 6 consecutive quarters of earnings declines from the healthcare sector, really as these companies normalize after the dramatic pull forward from COVID. So we think we're at an inflection point. Analysts are expecting very strong earnings growth for this quarter. And the picture should even improve in the coming quarters and into 2025. And the sector trades at a very reasonable valuation, a pretty significant discount to the overall S&P 500 as well.
Another big theme here, Dan, in this sector, of course, has been M&A. And I'm just curious if you expect that trend to continue. And if so, Dan, would there be any acquisition targets, possible ones, on your radar?
I do expect it to continue, especially in the pharma space, where we have these companies that generate a tremendous amount of free cash flow, and most of those are looking to bolster their pipeline through both organic R&D and also through inorganic acquisitions as well. But we tend to focus on some of the cleaner stories in the space, and some of the companies that really have the cash position to actually do the acquisitions.
There's also, of course, the demographic trends that are maybe supportive of healthcare broadly here. So when you try to pick stocks within healthcare, do you try and look at those that are trying to benefit from those demographic trends specifically?
We do, and I think those demographics are extremely favorable for the healthcare sector. If we look back about 10 years ago, we had about 14% of the population above age 65. Today, that's above 21%. If we look at healthcare spending, 50 years ago, that was 5% of GDP. Today, it's closer to 17% and rising. So we think that just creates a very strong fundamental backdrop for a lot of pharmaceutical companies as well as healthcare insurance.
And Dan, let's get into some names as well. Merck, for example, I think you noted is your top pick in the pharmaceutical space. How come?
Well, Merck just has a very solid top-line revenue growth profile. They've grown revenue at about 7% a year over the last 5 years. Looks really attractive compared to their peers, and we think that they can do it going forward. A lot of that growth has really come from their blockbuster cancer drug, Keytruda, and they're currently working on an injectable version of that drug, which could extend patent protection well into the 2030s. The company also has a really strong pipeline of drugs that they'll be bringing to the market over the next 3 to 5 years. And a lot of players in the pharma space just can't say that. A company that generates a lot of free cash flow, which gives them a lot of flexibility and optionality to do some of the things like I talked about, look at M&A opportunities, raise the dividend, and increase their buybacks.
One of the things that Merck isn't necessarily exposed to is the GLP-1 trend right now. Or at least they don't have anything out at the moment. And I'm wondering why, if that was sort of a conscious move on your part not to pick one that is leveraged to that, or what you're thinking around that whole theme is.
Well, I would say it's certainly something that Merck is looking at. And, I think if we were to see an acquisition, maybe that's one of their targets. But I think when you look at valuation, much different picture with Merck that only trades about 13 times next year's earnings estimate. So there's not the amount of froth or over optimism, I would say, with some of the ones that are more exposed to the GL1 space, which is certainly becoming more competitive.
And Dan, another thing I want to get your take on, UnitedHealth. Stock has not done much this year. It's actually down about 3%, but earnings on deck. They report next week. What do you expect to hear, Dan?
Yeah, I think the real focus for UNH this quarter is going to be on the medical loss ratio. That's really what's put a hamper on the stock. They're having to pay out a higher percentage of their insurance premiums in medical costs. We think that that's really a hangover from the COVID environment where everybody delayed medical visits and procedures. But over the long term, this is a company that's grown their earnings per share in mid to high teens. That's right in line with their medium-term guidance going forward. We think that's very doable, and we're really looking at the name as a growth company that's trading at a value multiple. Stock only trades at about 16 times, and if they are growing earnings, in the mid-teens, that's a very attractive setup in our view.
I'm wondering, there were recently reports that the FTC was looking into suing the pharmacy benefit managers. Is that a risk that you're looking at in this sector at this point? Are you trying to avoid some exposure to that?
Well, I think we just realize in general that healthcare stocks tend to be the punching bag sometimes in the political season, and it's just it seems like it's very popular for the politicians to point the finger at PBMs. But when you dig into the business, I mean, these are extremely low margin businesses. It's all driven by volume. So I think the more that you really dig in, I don't think it's very easy to say that they're out there gouging the consumers.
Dan, great to have you on the show today. Thanks so much for joining us.
Thank you.